publisher of National Mortgage Professional Magazine, and I would like to welcome you to National Mortgage Professional Magazine's webinar series, and today's webinar, sponsored and presented by American Financial Resources, titled Introduction to FHA 203H Mortgage Program for Disaster Victims. I would like to thank all of our webinar attendees for taking the time out of their busy day for this valuable and informative webinar in our ongoing series of webinars. I would especially like to thank today's webinar sponsor and presenter, American Financial Resources. AFR Wholesale, a division of American Financial Resources, Inc., is a nationwide wholesale residential mortgage lender headquartered in Parsippany, New Jersey. Their national campaign advertising, "We Love Brokers," illustrates their continued commitment to both the broker and correspondent channels. They currently serve thousands of mortgage brokers and lenders throughout the country with their residential financing needs. In business since 1997, American Financial Resources, Inc. has grown to be one of the largest wholesale lenders in the country and has recently introduced VA conventional one-time close USDA 203H disaster relief, and as we are featuring today, of course, the 203H disaster relief program. Our presenter for the 203H program is Thomas Wilson, part of AFR's Wholesale Broker Services. Tom has been with American Financial Resources for over 4 years and comes to the industry with a background in architecture, residential construction, and technology. Tom is a graduate of New York Institute of Technology with an undergraduate degree in architecture and construction. And before we begin, I just want to comment and compliment American Financial Resources on sponsoring and presenting this important webinar. Regrettably, the many natural disasters that have occurred over the past few years have given rise to the necessity for the FHA 203H mortgage program. This is definitely a program, a webinar, that has a very, very limited audience. However, for those people that are in need of the FHA 203H program, it is an excellent resource for those disaster victims, and I compliment American Financial Resources on exposing this excellent resource to the origination community so that they could bring them to the disaster victims in their community. And with that said, I am proud to present today's presenter, Tom Wilson of American Financial Resources.
Thank you very much, Joel. Good afternoon. Today we have the FHA 203H program designed for homeowners in a disaster area. So here's everything we're going to be going over today. If you have any questions during the presentation, your best bet is to write them down, and I'll try and answer them at the end. If we don't have time, you will be able to utilize the 203H email for any questions you might have. So what is the 203H? The Section 203H program allows FHA to insure mortgages made to victims of major disasters who've had their homes substantially damaged. It helps victims in presidentially designated disaster areas recover by making it easier for them to get mortgages and become homeowners or reestablish themselves as homeowners. So basically, the 203H is for families whose houses were destroyed in a presidentially declared disaster. One thing to keep in mind throughout this presentation is that the 203H stems from the 203B standard program. So if something is a little bit unclear, you should be defaulting back to the 203B for guidelines. So how do you know if the house was in a presidentially declared disaster area? The answer is going to be FEMA. In order to access the FEMA website, I have found it easiest if you actually go onto Google and type in FEMA disaster. Once you do that, click on the first link. Now, something that you're going to need to keep in mind is that I'm going to be calling it a presidentially declared disaster area. FEMA is actually going to call it a major disaster declaration. So the two terms are going to be used interchangeably. I find the easiest way to search through this is actually drop down this major disaster declaration. Go ahead and put in whatever state you want. I'm going to use New Jersey because that's where I am. Hit go, and then it's going to pull up all the disasters here. So once you click on one of the disasters, It's going to give you a couple different items of information. The key thing that you're going to want to look at here is this right here, the major disaster declaration declared on whatever that date is. That's going to be your key date. Joel, I think you had some poll question you wanted to ask?
Yes, let me just ask this poll question. I'm going to give everyone an opportunity to respond to this poll question, and then I will report on the results of it right after we close the poll. The question is, how familiar are you with the FHA 203H program? Either respond, very familiar, and I have originated 203H loans, somewhat, however, never originated 203H loans, or not at all. And I'm going to give everyone a minute or so to respond to this, and then I will report on what the results are. And by the way, if you have any questions, you could submit them through the GoToWebinar program, and we will attempt to answer all those questions during the question and answer period later in this presentation. However, if your question is not answered, the folks at American Financial Resources and our presenter are going to be answering them post-webinar. So get them in there. You will be responded to post-webinar if for some reason your very important question is not responded to during the course of the webinar. We're going to let this stay open a little longer. And I'm going to close it at this point. And 2, 3, closed. All right. Tom, I'm going to report to you that 5% are very familiar and have originated 203H loans. 32% somewhat familiar, however, never originated a 203H loan, and 63% were not at all familiar with this program. And once again, my compliments to American Financial Resources, because you're exposing this to a rather large audience that did not know about this. And I give it back to you, Tom.
All right, thanks, Joel. That's basically the response I expected from that question. With everything going on as far as past and recent disasters, I think this program should and probably will be utilized quite a bit more throughout the entire country. Now, continuing from there, the application date must be within 1 year of the declaration date. So that number I showed you before, the date that I showed you before, FHA is going to be pretty cut and dry on that. So who's eligible for a 203H? We're going to have homeowners and renters whose houses were destroyed in a presidentially declared disaster. Now, in my opinion, I think the renters part of the program could amount to big numbers in certain areas. That is, if enough research is done about the renting percentages in those areas. Moving on to what types of properties are eligible. Basically, you're going to have primary residences, single-unit detached houses, and FHA-approved condos. Pretty simple there. Ineligible properties, basically, if you didn't see it on the previous slide, it's not going to be there. Obviously, investment and second homes aren't going to be because it is still an FHA product. Everything else clearly is not a typical product, therefore FHA won't do it. All right, now as for the terms, FHA is going to be offering basically the same exact thing that stems from a 203B. So all the same product terms are going to be available. Anything up to 30 years, including ARMs, is going to be fine for FHA. All right, so transactions, FHA is going to offer 203Hs for both purchase and refinance transactions. However, I have to make it clear that American Financial Resources, my company, is only offering them for the purchase aspect at the current time. The 203H refinance and the 203K are tied very closely together, much like the 203H and 203B are. So if you need any more guidance on 203K loan, you can feel free to attend Andy Allen's webinar. He also works with American Financial Resources and does calls about 203K standard and 203K streamlined products. To get to his webinar, you can go to our homepage at afrwholesale.com, go to the Resources tab, AFR University, and then it's going to have all of his dates right here. You can feel free to just go ahead and register whenever you want. So maximum financing. Applicants are going to be eligible for 100% financing, which means that there obviously is no down payment required. Much like any program, the borrowers can feel free to have a down payment, but it is not needed. This is where I think the fact that renters are eligible could be huge. The experience I've found from being a loan officer, a lot of people who are currently renting don't have a whole lot of money to put down, let alone after being in a disaster. So I think this program drastically assists any type of buyer who is short on money for down payment. As far as the closing costs and prepaid goes, it's going to kind of stem from the 203B program again and allow the borrowers a few options for the cost. Basically, they can either be taken care of by the borrower at closing, through premium pricing or any kind of credit the lender offers, and through seller's concession. Please keep in mind that FHA has a max 6% seller's concession. So this slide's basically the exact same thing as the maximum financing was. They wanted me to put it in there anyways. Obviously, I think it's a great thing to put in there twice, as it does have a major advantage for the borrower. All right, so the mortgage insurance is going to be the exact same as a 203B loan. By now, I'm sure it's sinking in that these two programs are, in fact, very similar, if you didn't believe me before. Here's the MIP chart. Again, it's the exact same thing as the 203B, including the most recent changes. I'm sure you all know and love this very well. On to maximum mortgage amount. And you guessed it, it's the same thing as the 203B. You can find the max amounts on HUD's website. You can find it on the Fha Connection, and it's actually sometimes preset into your originating system, depending on what you're working out of. So here's what I'm sure everyone's wondering about. How do you know if the damage to the property will qualify? The borrower obviously must have been in a presidentially declared disaster, and the house must have been destroyed to the point that replacement or reconstruction is necessary. So basically the borrower has to prove two things. One, that they live there, and two, that they can't live there now. They can prove that they lived there from one of the following. You have a valid driver's license, a voter's registration card, or utility bills. They can prove the property was damaged to the point that replacement or reconstruction is needed. They can go ahead and provide an insurance report, an inspection report by an independent fee inspector or government agency, or conclusive photographic evidence showing the destruction or damage. So although the borrower will have to provide the evidence, it hopefully won't be too big of a hassle to get their hands on, as most of these documents can be obtained through a third-party source. Minimum credit score FHA will be taking is 500. I'd say it's pretty safe to assume that not too many lenders out there are going to go that low. I know AFR will be taking them down to a 620 credit score. All right, now everything you're about to see in these general underwriting slides are just that. They're general. Obviously, no one can predict every scenario possible, so realize that these may not address all situations you might run into. Credit. So the credit point basically states that if there's late payments prior to the declaration, the borrower will not be eligible. Now, if there are lates that are after the declaration date and were caused from the disaster, FHA will consider that fine. The CAVERS point is pretty much going to be the exact same thing as the credit point, but it will include all loans made or insured by HUD, and it's going to extend out for 3 years. The guiding principle is to provide FHA financing to disaster victims who can make mortgage payments but may not be able to provide the traditional documentation to support their ability to repay the loan. So ideally, FHA wants to write clean standard loans, but they're obviously willing to make exceptions and use alternate means for some documents. As with any CAVERS authorizations, lenders may contact the appropriate homeownership center for additional 203H underwriting information and guidance. So here's where the program may start getting a little bit tricky for some. Obviously, the preferable method for income verification is going to be the same standard way that a 203B loan would get verified. But since we are dealing with properties in disaster areas, there's a chance that typical income documentation may have been destroyed. If this is the case for either past or present employment, the lender and FHA will be flexible on documentation required. Again, keep in mind that standard methods are preferred and that the lender should document all attempts to obtain traditional documentation. The qualifying ratios paragraph addresses if there is a mortgage on the current property that was destroyed. So basically, what it states is that if there was a mortgage on the property, that it can be excluded from the ratios as long as two conditions are met. First, that the borrower is working with the servicing lender to address the mortgage obligation, and second, that any homeowner's insurance proceeds will be applied to that mortgage. Again, both of these items will be needed to prove in order to get that outstanding mortgage obligation off of the borrower's ratios. All right, so assets, just like income verification, the lender will attempt to verify income using, verify assets using the standard procedures. However, in the event that hard bank statements are not available, the borrower may need to download statements online or contact the bank to retrieve copies. This one shouldn't be too bad nowadays, as most lending institutions can be done online, like Bank of America, Wells Fargo. Those are all typically online services now. The liability section is going to be the same thing that qualifying ratios was about. As long as the borrower can prove that they are working with the current servicer and that the insurance proceeds will go to the mortgage, they should be fine. Again, it's slightly repetitive, but it's a very important thing to note twice. FHA takes the position that insurance settlements are likely to pay off remaining obligations. However, documentation should be obtained to support the fact. All right, so obviously every company is going to have their own overlays to this product, and since what I'm giving you right now are the FHA guidelines, I want to make sure that I'm clear about what my company's overlays are so there's no confusion as to what we will and won't offer. Currently, AFR is offering this program for purchase transactions only. As I mentioned earlier, the refinance aspect is very closely related with 203Ks, so you can feel free to check that program out if you have time. Again, as I mentioned before, AFR will go down to a 620 FICO. We will need at least 2 FICO scores. For AFR, all credit will be manually underwritten regardless of the score. We're going to make sure that the payments are in place, and just like the FHA guidelines, if any late payments were caused by the disaster, they can be ignored. AFR is not currently allowing ARMs on the 203H. We're going to have a 10, 15, 20, 25, and 30-year fixed, fully amortizing loans available. 203H and 203Ks cannot be combined with AFR, as we are not doing any refinance portion of this loan. Gift funds won't be acceptable with AFR. If the seller of the property is a corporation and or title shows no liens being paid off, AFR will require a VOD that we will be obtaining. Subordinate financing will not be permitted. Non-traditional credit, as just as in normal loans, will not be permitted. Non-occupying co-borrowers will not be permitted. The borrower may not own more than 4 financed properties. No Section 8 or loans in military zone impact areas, and AFR will have a maximum debt-to-income ratio of 31:43 on all files, regardless of scores. So that's pretty much it for, as far as the 203H goes. As you can tell, it's really not that difficult of a loan. It really is kind of just like a 203B with certain caveats. That's just our disclaimer. Got to have it in there. I have a little bit of time for questions. Joel, can you go ahead and give me some questions?
Sure, absolutely. By the way, if your question is not answered during the webinar, you can, and you submit it through the webinar, it will be answered post-webinar. And if you come up with a question post-webinar that you didn't submit during the webinar, you could submit it to 203H@afrwholesale.com, and we'll give that to you again later. The first question comes from Richard from Sandy Hook, New Jersey. Does the application need to come in 1 year after the declaration date or the actual date of the disaster?
All right, so the answer to that is going to be the declaration date. That's actually a good question, because if you look at the declaration date and the actual date that the incident occurred, sometimes they're a little bit off. Now, granted, they are very close, so for 99% of your files, you're not going to run into an issue, but inevitably, down the line, someone may run into that issue where an application is submitted on October 26, 2013, for example, and it's not within this timeline. So the answer to your question is going to be the declaration date.
Okay. The next one comes from Sarah of Overland Park, Kansas. Does the renter need to have their insurance paperwork, or can they use a landlord's paperwork?
Okay. So just based on the premise of the program, the insurance paperwork is really there just to prove how badly the property was damaged. So as long as the documentation provided shows the damage pretty definitively, the borrower shouldn't have any issues.
Okay, the next one is from Joe from West Texas. I have seen on the FEMA website that there is public and individual assistance areas for disasters. Will the program be offered in both public and individual?
Okay, so what they're actually talking about is right here. If you, when you're on the FEMA website and you go to the disaster, if you click designated areas, you're going to see two different types of assistance. You're going to see individual assistance and you're going to see public assistance. That's actually a really good point to bring up. This program will only work with the individual assistance. Okay, there are some natural disasters that happen, or excuse me, major disaster declarations that happen that have individual but don't have public. There's some that have public but don't have individual. In this case, Hurricane Sandy in New Jersey has both. So the answer is the individual assistance is going to be the one that you need to keep an eye out for this program.
Okay, next one comes from Jessica from Ocean City, Maryland. Does the application need to be submitted to the lender within 1 year, or does the application date need to be within 1 year?
All right. So the actual application date will need to be within 1 year. I know the slide that I had up there was worded a little bit differently, but it is going to need to be the actual date of the application, not the date of submission that you give it to your lender.
Okay. Next question comes from Robert from Oceanside, New York, which also happens to be where I hail from. Hello, Robert. Is there a reason your company is not doing the refinance side of this program?
Well, we're already pretty in tune with the 203K and 203KS programs. And like I said, since they're fairly similar programs, we're just going to go ahead and stick with the 203Ks for the time being.
Okay. Gene from Sedona, Arizona asks, for the closing costs and prepaids, can the borrower use a combination of credit and concession?
Yeah, I mean, absolutely. This is going to default right back to the 203B guidelines, where this is absolutely fine to do. Utilizing this is also a really great way to try and get the borrower to the closing table without bringing any money. So, yes, they absolutely can.
Okay, next question comes from Fred from Moore County, Oklahoma. Can you give any example of what might be used for income verification if the borrower's documents were destroyed, which I'm sure in many cases is exactly what happened?
Yeah, I mean, ultimately it's really going to be up to the underwriter. But a great way is to, for example, get W-2s and tax returns from the IRS. A credit report is usually going to show the current and previous employers. I mean, there's really a lot of different ways that you can obtain these items, but it's usually just a matter of what's going to be the fastest and the easiest way to obtain the documents.
Okay, next question comes from Barbara of Hollywood, Florida. Can you show me how you got into the Fannie Mae website again? I was watching and I didn't really capture it.
Was that the FEMA or the Fannie Mae website?
FEMA, I'm sorry, FEMA,
oh, okay.
Sorry.
Okay, so it's pretty easy. I mean, again, there's a lot of ways you can do it. I find the easiest way, go to Google, type in just simply FEMA disaster, and click on the first link. Now, once you're in the website, there are a lot of different ways that you can actually get around about finding you can search by year, you can search by state. The key thing that you need to remember is that it's not any of these. It's not emergency declaration, fire management, or fire suppression. It is major disaster declaration. That's going to be the one that you need to focus on. So that's how I get into the website, at least.
Okay, and an additional one from George from Wildwood, New Jersey. Will there be a special ADP code to put into FHA Connection for this program?
Well, the ADP code is going to be whatever the 203B loan is, since, again, this is based off of 203B. The big thing is you need to make sure that the insuring screen is marked as a disaster loan. But other than that, it's just simply whatever the 203B is going to be.
Okay. That kind of ends the questions that I think are not specific. We have quite a number of questions that are going to be pushed to you that are very, very individual in nature that I really think that need to be answered individually. So we're going to push those to you post-webinar. Okay. If anybody does have any questions, they can answer. They can send them to 203h@afrwholesale.com. And I just want to kind of give a personal comment. Being prior to going into the publishing business, I was a mortgage broker and a loan originator. And I realized that this is a program that is almost a public service. And if I was out there, boots on the ground in these areas, and I was a mortgage originator, a loan originator, I would be trying to assist the community by going to organizations and so on, and not selling this product, which is one of the things that I know AFR is very concerned with. You wanted to let this be known that this is an available option for these disaster victims. And I think based upon just the number of people that responded to the poll question, if the origination community doesn't know about it, I can imagine how many people that need this program do not know about it. And for that, I would say that the more you can get out there in the communities that were affected by this and let them know about the existence of this program, you're not going to be selling, you're going to be helping those disaster victims that are just so stressed and involved with recovery that they don't even have the time to be able to even discover a resource like this. And you're going to be the bearer of good news in a world that's been all bad news. So I would say that I don't know if you have any comments in terms of how they could approach the public in terms of not promoting but disseminating the availability of this program.
I mean, you kind of hit it on the head with the way you said it there. It's really not. I mean, these borrowers are looking kind of for an out, I guess you could say. They obviously want something, and the nice thing about the way this program is designed is it's a 203B without as hard as strict of guidelines, so to speak. You have the 100% financing. They don't have to have anything down. So it's really, I mean, even if you're trying to sell it, it's almost hard to come off as salesy because these people want to hear the information that you're having. I mean, it is all good news because it's much, in my opinion, it's much easier to qualify for than even just a standard 203B loan.
And the fact that it extends to renters, which is an extremely important option as far as that's concerned. On a personal aside, as I said, I'm from Oceanside, Long Island, and the South Shore, including my own home, got pretty badly damaged. But there are literally dozens of homes in my immediate area that I've already, since you started to promote this webinar, that I've talked to individuals that are actually, pursuing going for this program because their houses were substantially destroyed, and they are in an area that is a major disaster area, as FEMA calls it, and as we also understand it, it's also known as a presidential declared disaster area. And they would not have known about it had I not actually mentioned it to them. So my sincere compliments to American Financial Resources and Tom Wilson of American Financial Resources for presenting this webinar. And if you have any closing comments at this point.
Yeah,
Take it
well, I
away.
mean, obviously, Joel said, all your guys' questions are going to come to us. If you do have any other questions about this program, you can definitely, obviously look at HUD's guideline book. That's obviously a great place. That's where most of this webinar came from. But that's a good resource to go to. If you have any questions that you'd like to email after this webinar, like you said, it's 203h@afrwholesale.com. If you want to get there, simply go to our homepage right here, go to Contact Us, go down to Department Emails, and then it's obviously going to be the 203H email right here. That's going to be, whether it's FHA specific or AFR specific, either way, it's not going to be an issue. We'll go ahead and get you an answer back as soon as possible. Another good way to find guidelines, if you go to our Programs tab, you can click on any program. In this case, it's going to be specifically the 203H for disaster victims, and all of our guidelines are going to be right here. That's going to direct you to our All Regs webpage, which, again, has all of our guidelines for every single product. I think that's it for me, Joel.
Okay, Tom, I would like to conclude today's webinar, and I'd like to thank all of the attendees and, of course, today's presenter, Tom Wilson of American Financial Resources. If you have any questions post-webinar, you can email them to 203h@afrwholesale.com. I thank you for attending the National Mortgage Professional webinar series, and I wish all of you a great day. And the last comment I have is I hope we don't have too many more individuals in the future that are eligible for this program, but those that are, we hope they find out about it. Thank you.
Thank you, everybody.